Today we're looking at an analysis of that massive surge in Intel stock.
The one driven by the Apple rumor, right?
Exactly. The rumor about a potential foundry partnership, specifically around validating their crucial 18A process node. Let's just jump right in. I think there's a lot here to work with to really maximize the impact of what is a very strong initial assessment.
Oh, definitely. The report handles the immediate market reaction brilliantly. I mean, it captures that short-term enthusiasm.
It really does.
That whole psychological shift for traders, seeing Intel go from this struggling legacy giant to a potential comeback king, that's the core strength.
It is. And the analysis makes a very compelling case for that massive short-term rally. But, and this is the first big point, the long-term robustness of the argument demands a more integrated and forceful look at the skepticism around the partnership.
It feels buried.
It's completely buried.
I couldn't agree more. You have that section, skepticism, and it's structurally isolated. It feels like a mandatory kind of quick disclaimer at the end of the document.
Right, like a footnote. And by treating the caution that way, the material, it risks presenting an overly bullish forecast. It neglects the biggest risk.
Which is what?
Well, the weakness is that the report recognizes that Intel has, repeatedly failed to deliver on promises before, but it just minimizes how that past execution risk applies here.
To a highly technical multi-year deal.
Exactly. We are talking about a 2027 production timeline.
2 years in the semi-space is an eternity.
It is. I remember covering their previous roadmap misses. 2027 feels like a lifetime away when you think about how fast the competitive landscape moves. So many variables can derail this.
So to improve the logical strength, the intellectual honesty of the report, you have to weave those primary counter-arguments in throughout the analysis.
Not just stick them at the end.
No. Especially the concern over Intel's historical execution risk. You have to weave it in. And that lets the report pivot from just assessing the market reaction to assessing the likelihood of the rumor actually succeeding.
Okay, so you need to acknowledge the risk as part of the thesis, not as an afterthought.
Precisely.
But if we integrate that risk, how do we make it truly actionable for the reader? Because just saying be skeptical, that's obvious.
Sure.
We need a tool, something to quantify that risk right away.
This is where you introduce a risk framework. So for a concrete example, you could explicitly assign a conditional probability to the current stock move.
Okay.
The stock closed at $40.56 after the rumor. But what is that price actually baking in? Is it pricing in a 50% chance of this deal succeeding?
Probably not.
Right. So given the 2027 timeline and Intel's track record, you could label the current price surge as pricing in, say, only a 25% chance of successful execution.
And then explain why.
And then you explain why that number is appropriate.
Why that 25%? I mean, the number itself is just illustrative, but how do we justify that specific percentage in a way that feels credible?
Well, you use it to ground the analysis and force the reader away from binary thinking, success or failure.
Right.
You justify it by comparing it to, say, the implied success rate of a market leader like TSMC. If TSMC had this rumor, the probability would be near 90%, right?
Of course.
So by choosing 25%, you're forcing your reader to understand that the majority of the risk is still sitting on the table, and they're paying a premium just for the possibility of a future comeback. It helps measure the emotional part of the surge versus the fundamental probability.
That is a very powerful way to frame the risk-reward spectrum. It shifts the discussion from just what happened to what must happen for this to pay off.
Absolutely. And one more thing on this. When you're discussing the why behind the rally, that validation point, you should immediately follow it up with a structural question.
Like what?
For example, if Intel fails to execute 18A by 2027, what is the downside scenario? And how does that potential drop compare to this current 10% surge?
So you're forcing a full consideration of the outcomes.
You are. If the upside is 10%, but the downside is 30% because the whole narrative just collapses, the reader needs to know that up front.
That structured approach makes the analysis much more balanced. It anticipates the critiques, which I think brings us directly to the core metric this analysis needs to emphasize more. The report correctly highlights this belief that landing Apple would fundamentally validate Intel's foundry business to the entire market. That belief is what drove the stock surge.
And that identification is excellent, but it needs to be more precise. So while the material correctly identifies Apple as the validation target, the analysis must more emphatically define and isolate the specific technical condition required for that validation.
Which is the successful yield of the 18A process node.
That's it. That's the whole ballgame.
I see the weakness here then. The report lists things like the NDA signing,
the Made in USA push, as evidence of seriousness.
Which they are to a point.
They are, but they're preliminary steps, they're handshake moments, really. The true non-negotiable hurdle, the one that decides if this comeback king story is real or just a fantasy, is proof that the 18A node is yielding usable chips.
Usable chips that satisfy Apple's notoriously high standards.
Exactly.
And right now, that critical dependency, the 18A progress, it's relegated to a bullet point. It's just sitting in the future outlook section.
That's not enough.
It's completely insufficient given its central make-or-break role in this entire thesis.
So the suggestion for improvement here has to be elevating the success of 18A from just a bullet point to the central measurable thesis of the entire report.
Yes.
Doing that strengthens the report's ability to guide investor focus because it ties the stock price reaction directly to this one single technical outcome.
If the core story is 18A validation, then the whole structure of the piece has to reflect that priority. If we were rewriting the summary right now, we would have to just hammer home that this new narrative is entirely contingent on 18A success.
And crucially, you can't just say wait for the PR. You have to tell the reader what supply chain signals they should be looking for.
That's the actionable part this report really needs.
So what technical indicators should investors be monitoring specifically, knowing that official yield numbers won't be out for months, maybe years?
We need to point them to the highly technical, often non-public indicators that show process maturity. So, for a concrete example, suggest monitoring for reports on things like power delivery network complexity, PDN.
Okay, explain that a bit.
It's basically how engineers manage the massive flow of power to the billions of transistors on the chip. It's a huge technical challenge. Or you could track specific thermal performance metrics coming out of early process design kits, the PDKs.
The blueprints Apple would use to test their designs.
Exactly.
The foundational blueprints. So we're shifting the reader's focus from tracking public announcements about the deal to tracking these highly specialized metrics that validate the technology. Why should a generalist investor care more about PDN complexity than a major announcement?
Because the deal itself is political, it's economic, but Apple's decision to use Intel is purely technical. At the end of the day, it has to work.
I see.
If the 18A process can't handle the power density or thermal requirements, the very things that PDN and thermal metrics measure, the deal is dead. It doesn't matter what the geopolitical pressure is.
So these indicators validate the process long before any official PR would ever hit the wires.
That's why they matter. It gives the reader an expert view, a leading indicator of what's truly going on.
That completely reframes the discussion.
And so you should modify the market reaction section too. Clarify that the current bullishness is not validating the deal. It's still a rumor. It's validating the potential of 18A.
And you need to state explicitly that a failure of 18A validation means a complete failure of the comeback narrative.
No matter how many NDAs are signed, the technology has to work. Period.
Focusing on tech validation as the ultimate gatekeeper, that actually brings us pretty seamlessly to our final area of critique, the macro backdrop.
The geopolitical angle.
Yes. The analysis correctly includes the Made in USA push and supply chain diversification as key reasons for Apple's interest. It addresses that risk for Apple specifically.
And that's a solid starting point. It is. But the analysis needs to stretch its legs a bit, move beyond just the two immediate parties, Apple and Intel.
So you're saying...
I'm saying the analysis correctly identifies geopolitical pressure as a driving force for Apple. But the material can significantly deepen its relevance by exploring the second-order effects of this partnership on the whole global semiconductor landscape.
Right now, the geopolitical part is very internally focused. It's how Apple reduces its own risk and how Intel gains prestige.
Exactly.
But it's missing that exploration of the systemic repercussions, what this could do to TSMC's dominant position, to the global balance of foundry power.
So, to really maximize the significance and relevance of the report, the so what? The suggestion is to broaden that analytical lens. You have to consider the competitive response, the regulatory context.
You're transforming the section from a simple reason why the deal matters into a deeper explanation of the strategic consequences for everyone.
For all the major industry players.
Let's delve into those consequences then. What's the first one? The impact on TSMC.
Right. For a concrete example, you need a section analyzing the potential impact on TSMC. The rumor says this is only for low-end M-series chips.
Which is easy for a reader to just dismiss.
It is. But we need to explore why losing even a tiny sliver of Apple's massive, prestigious business actually affects TSMC. Suggest exploring how this impacts their capacity allocation or maybe their pricing strategy for other high-end clients.
Because even a partial move like that is a huge symbolic blow to the market leader, isn't it?
TSMC relies so heavily on that prestige.
It's their whole brand. It affects their confidence, their valuation, their perceived invincibility. If Apple, their most critical customer, is willing to diversify at all into a competitive process years ahead of time,
It signals a systemic risk.
a systemic risk to GSMC's dominance that goes way beyond the small revenue hit from some low-end chips. That competitive layer strengthens the analysis significantly.
Okay, and on the policy side, how do we connect this rumor back to U.S. government incentives?
You have to make that connection explicit. Suggest discussing how a potential Apple-Intel deal immediately strengthens the argument for more CHIPS Act funding.
Or other regulatory support?
Or other support for onshoring manufacturing, yes. This rumor acts as a real-world proof point for politicians. They can say, look, the policy is working, major U.S. companies are partnering to bring manufacturing home.
That makes the analysis instantly relevant to policy investors, to macro funds, the people tracking Washington, D.C. as much as they're tracking the market.
Exactly.
That kind of expansion elevates the material dramatically. It moves the analysis from just being a commentary on a single stock to being a vital document about geopolitical industrial strategy.
It addresses a much wider, more sophisticated readership.
That's the power of extending the analysis from the transaction level to the systemic level. It shows a complete understanding of the context.
It really does.
So, to recap, we've covered 3 distinct areas where this analysis report can be substantially upgraded. First, we're strongly recommending integrating skepticism.
Not as a footnote.
Right, not as a footnote, but as a core component of the risk assessment, especially given that 2027 timeline in Intel's history. And that means framing the stock surge with a conditional probability framework.
Second, we emphasize the need to sharpen the report's focus so that the validation of Intel is irrevocably tied to the technical success and yield of the 18A process node.
And crucially, telling investors to track those technical metrics like PDN complexity and PDK thermal data instead of just waiting around for press releases.
And finally, we explored expanding the geopolitical lens beyond simple supply chain diversification.
To discuss the systemic, second-order effects on competitors like TSMC, analyzing that competitive and symbolic blow, and how this rumor directly impacts future regulatory and CHIPS Act funding arguments.
Look,